Very nice way to start your business and market day. This is how it goes. Get it started with us every weekday here on Channel Television. This is your business morning. I am Bosun Omofai. Let's get the show started. What's in the news this morning? Nigeria's Minister of Finance, Zainab Ahmed, calls for a review of Nigeria's procurement process. Some staffers of MDAs, or what you call ministries, departments, and agencies and contractors have been accused of delays and scams of fraud, stifling and derailing our budgetary process. That was part of what the Finance Minister told the National Assembly on Monday. Meantime, the Economic and Financial Crimes Commission Secretary Ola Olukayode says 2 weeks ago that public procurement officers fuel corruption, as some 32 individuals and corporate bodies have been fingered in 1.3 trillion procurement fraud between 2011 and 2016. And if you're looking at something that is working, this is the new National Collateral Registry. That was registered or established in 2017, May 2017 to be precise, under the new Collateral Registry Act. Now, the new Collateral Registry now has assets worth 1.26 trillion naira registered by individuals and businesses. The idea of the National Collateral Registry was to allow individuals and businesses with collateral assets like inventories, motor vehicles, plant and machinery, and other things, furniture and fittings, whatever, to register them with this collateral registry, and they will have access, easy access to credit within the financial space. Now, that business or that initiative of the Buhari's administration seems to be working. 1.26 trillion naira assets already registered, and you can, of course, read more. It's already in the news. Meantime, the Central Bank Monetary Policy Committee report of March 26 shows that credit to the private sector is increasing 6.41% in the month of February against the benchmark of the regulator of 9.41%, helping the steady growth in manufacturing index reading or the purchasing managers index. And that's just bringing you to what we got just a few hours ago. Early this morning, Nigeria's March PMI, according to FBN Quest's report, shows 12.9% jump in the month we just finished, bringing it that to a record high of 56.3. That's a very big figure. We'll talk about that in a few more moments. We'll see and analyze that down, how Nigeria's PMI continue to move up very steadily, more than 20 months consecutive steady growth. Okay, now this is one of the most problematic issues we've had, and if you're on Twitter and social media, this is one big story that is still happening. As of this morning, Nigerians are reporting increasing number of delays and failed transactions when you use a POS, what you call point of sale, whether you buy petrol at the gas stations or you go shopping. That's a big problem. So all these complaints on social media and in the media, in the news, getting into the ears of the Nigeria Interbank Settlement System. That's NIBS. That's the central body at the heart of the entire POS transactions problem that we have. So NIBS says it is meeting or has met with the commercial banks who are involved in the POS transactions to rectify or reduce the time delays for electronic transactions for POS. So what is being done? Take a listen. And those of you who are tweeting and adding me to the entire conversation, this is what has been done to clear up this mess that is increasing in recent times. The total turnaround time configured between NIBS and the banks is 15 seconds. That is, it takes 15 seconds to complete when the time you put in your POS and then you put in your PIN and the transactions at the merchants goes in and all that, and you're debited for that transaction. So it's 15 seconds. That's the configuration with the banks and the processor firms. But according to NIBS, there are delayed responses from issuers which could cause authorized debits not to return to the terminal before the turnaround time of 15 seconds. So this is how the problem goes. This is what the NIBS chief executive, Ajayi, says yesterday. He says remedial steps, or this remedy, or solutions, are now being taken. In the month that we just finished, this is what he says they did. Adjustment of the timeout now to 20 seconds from 15 seconds. That, he says, was done on March 14th. In other words, you're going to experience a bit more of seconds delay in the processing time from 15 seconds to 20 seconds to allow everyone in the loop, including NIBS itself, to clear your point of sale transaction, or POS. Now, the adjustment of the timeout to 45 seconds from 20 seconds was also set on March the 19th. All of this took place in the month we just finished, and they're just reporting that for everyone. So the adjustment has been made to remedy the problem and expand that process period from 15 seconds to allow all parties in the POS transactions to get them cleared out. NIBS CEO says the process is ongoing to disable any issuer which delayed responses beyond 45 seconds with immediate effect and isolate such a bank. That looks like something that my folks and other folks out there will be happy about. That NIBS says there will now be some kind of what you call sanction on any of the issuer who provided a delayed response beyond 45 seconds on a POS transactions, and they will isolate such a bank. NIBS went on to say that whenever there was a transaction decline, that is when you get a print up and everybody's getting annoyed and upset. The system is supposed to reverse the transaction such that a debited cardholder would receive a reversal credit within 45 seconds. So what caused the delays? So these are the problems, really. Platform downtime, according to NIBS. That's the Nigerian Interbank Settlement System. So the problem you folks are having, and which I also have, and almost everyone has, is the platform downtime, network issues at the processor level, delayed responses, and issuer switch inoperative processor, and when a bank is not available to receive reversal, even when transmitted by NIBS. Hope that clears things out a little bit for everyone. So let's talk about the big story and the big new bank on Broad Street. Access Bank unveils new logo, closed the market at the stock exchange on Monday, listed a new 15 billion naira climate change bond on both FMDQ, OTC, and the Nigerian Stock Exchange. What are the fast facts about the new bank that is now emerging? Access Bank now is worth 231.08 billion naira. In terms of market cap, it's not the largest bank in Nigeria. Hold on a second there, folks. Let's just get that to you. Access Bank has a market capitalization 231 billion naira. That is smaller than UBA, 263 billion naira. Zenith Bank is still a big brother, 687.58 billion naira. And FBN Holdings, 287. So if you look at it in terms of market cap, Access Bank, the new Access Bank, is coming at number 4, behind Zenith, UBA, FBN Holdings, UBA, and then you have Access Bank. Now, this is where you need to pay close attention. The total shares outstanding now in Access Bank with the combination with Diamond Bank is now 35.45 billion shares. Yesterday, about 6.6 billion shares were added to the shares of Access Bank on the stock exchange. So bringing it from 28 to 35.54 billion shares. This is one of the heaviest and the largest shares on the market. And then when you have very big shares outstanding, you have to think of how to finance it and pay a dividend. Okay, what's the price yesterday? Closing price, Access Bank, 6.50 kobo, 52-week high, 11.35 kobo, and a 52-week low at, what's the price now? Move it up. Thank you. 5.20 kobo per share. Total customers, 26 million customers. That's the largest bank in Nigeria, Access Bank, by the number of customers. Temple Ashaju, our market correspondent, is going to come in here for just about a minute to weigh into this conversation. Temple, you have just about a minute to take us through. Let's look at the stock market. Just only that for yesterday. I've taken some of the time to break down some of the issues. I'm sure you've had some issues with your POS. When you put in the card and you have a problem with debit, not reverse, then we have to go to the bank and fill some form or whatever. But let's leave that conversation for another day. This is your new bank, Access Bank.
Correct, Bosun. It's the new bank, and so 6.6 million, 6.6 billion ordinary shares of the scheme consideration was added yesterday, and that brought up the fully paid up shares of Access Bank to between 33 and 35 billion ordinary shares eventually. Well, we spoke to the DMD yesterday, and of course, that story should be on air later in the day. They confirmed the fact that this is a good development for them. It is something that will also help them to really perform better. They will be able to handle all of the debt obligations of Diamond Bank, and so there's no cause for alarm going forward. But talking about the market yesterday, we lost over about 150 billion of the market capitalization yesterday. Market capitalization actually declined by some 1.28%, while the all-share index declined by 1.66% to 30,527.57. We saw a surge in the volume of transactions, and we saw the value at some 3.67 billion naira. Wema Bank took the top trade position yesterday, losing some 9.09%. After we saw some 1.46 billion units of its shares sold off yesterday in the market. And if you take a look at what we had on Thursday, that particular bank had actually saw transaction around some 1.7 billion ordinary shares. So it looks like almost 80% plus has now been taken out of the market in terms of the Wema Bank unit shares there. But if you take a look at the sectors, sectoral analysis, which shows that there was losses across board. We're seeing a lot of litigations in the market, and of course that has given rise to a whole lot of sell pressure in the market. Two of the key bellwethers now have some litigations to grapple with, and that is one of the key reasons why you see a huge sell-off on those companies. Then that ended up impacting on the consumer goods sectors, which was down the most yesterday by 4.92%. The banking segment was down about 43 basis points, and of course if you take a look at the industrial goods segment, it was down 3% yesterday. Insurance segment was also down some 54 basis points. In the oil and gas space, we saw the gains that O&O and Eternal PLC both recorded in the previous trading session were both reversed. And of course, that brought you to O&O down some 9.73%, and Eternal PLC in the energy stock segment was down 0.943%. All listed securities segment of the market wasn't spared. It was also down by some 2.80%. The USI was down to 736.54 points yesterday. Market capitalization also shrunk to 529.15 billion naira. And we saw just volume at some 1.032 million yesterday, which tells you that the volume of transaction there just across 4 key securities out of the 38 tradable stocks in that particular segment of the market was what investors actually sold off such huge amount of volume on. In terms of the debt market, bonds was a bit bearish yesterday. It was quite mixed. Average yields rose some 10 basis points to 14.08%, while in the treasury bill segment of the market, things were a bit mixed as well, was bullish. But we saw average yield compressing by some 16 basis points to 13.39% both.
Tempo, yes, quite a lot of stories around the market, but let's talk about this a little bit later on the program. Thank you very much. Let's take in all this from our commodities lookout about where we are. But of course, the big story this morning is Nigeria's PMI, which is the gauge of manufacturing activity, up a whopping 12.9%. This was one of the strongest reading on Nigeria's PMI we've seen in recent times. Bolanle Agbaje from Financial Derivatives Company is live here in the studios with us as part of what she's brought to the table. Thank you.
Thank you.
Big news, good story.
Yes,
with the PMI.
Beginning of the new Q2, manufacturers are going back to what they know how to do best. Yes, it's not a surprise that as long as, the election uncertainty has been removed from the market, manufacturers will go back to, almost overcompensating for the supply that was actually lost between those times. And obviously, looking at the Easter period approaching quickly, I think it's happening mid-April. So, they have to build up inventory to the point where they're expecting, consumer demand to increase by that time. And obviously, with the new minimum wage as well, we're expecting the implementation very, very soon. And that, optimism about the demand there would obviously boost their activities within that manufacturing
That's getting ready before the minimum wage release.
Yes.
And of course, the usual monthly FAC allocations. But then, if you look at one of the problems for the manufacturing sector, and quite a few things are happening with the manufacturing, we see the credit to the private sector according to the central bank increasing, and that seemed to lend credence to the the PMI numbers that we're seeing surging steadily. But electricity is still not yet uhuru.
Yeah, so the manufacturing sector is still plagued with electricity problems, credit to the private sector, and also issues with smuggling as well, which haven't been, addressed at this moment. But I think some of these manufacturers, apart from those problems that have already been existing for a couple of months, they are, obviously considering what is actually important at the moment, which is the increasing demand that they're going to face at the initially. But regarding the electricity, obviously the government has mentioned, several times their plans to make sure that we have stable power. As that today, electricity is actually down significantly compared to what we had.
11.6%.
Yes.
That's
significant. But, we never really corrected the problems in the electricity sector. So it's not a surprise that, the downfall in we obviously expect to see upticks and downturns in the electricity sector in the sense that the fundamental issues and the structural issues within the power sector hasn't been,
So with the electricity down, the manufacturers are making do with diesel and petrol.
Yes,
and that's why we're seeing an uptick in diesel prices.
Yes.
Because you folks are looking at 230 to 240 naira per
yeah.
litre.
Yes, so diesel is actually the opportunity cost of using power. So if there's no power, they obviously have to they obviously have to rely on diesel, which is expensive. But at the same time, we as much as manufacturers would increase supply, we also know that as a result of the increased cost, we're expecting higher prices as well in the coming periods, coupled with the demand.
The cocoa price is up about 0.5%. That's good news. But again, we need to get this cocoa from the cocoa region, southeast, southwest, down to the ports. We need to fix that, and it looks like that Papa Port's mess hasn't been cleared up yet.
So regarding what we're actually producing in Nigeria, we haven't really focused on how to actually increase our cocoa production. When we're talking about cocoa prices and the production or supply, we're talking about Ivory Coast, Ghana, and in Ivory Coast, despite the heavy rainfall that we're seeing from mid-March to mid-June, we're still seeing uptick in cocoa prices. We think it's as a result of, the Easter celebrations. You have a lot of chocolate demand, during that period. So we're expecting that we'll continue to see cocoa prices go up.
Valentine, February.
Well, yes, but that obviously played a role in it. But, as at Q3 last year up until the beginning of this year, we actually saw huge downfalls in cocoa prices due to the increased supply. But with the heavy rainfalls, we expect supply to even increase, as much as more than what it's currently trading in the market at the moment. But, regarding cocoa, as long as it's not below the $2,000, mark, we're still, yes. Per ton, actually, metric ton, yes. We're not, it's no cause for concern. But regarding what we produce as at now, it's good news for export earnings.
Okay, let's put some. I have my cocoa and chocolates, drink and all of that. But again, I need some. Where are we with onion in our vegetable production? We do a few vegetables, but I'm sure one of the key part of that is onion production as well.
Yeah, onion production, it's a kitchen staple. So you can imagine how huge the demand for onions are. I don't think we actually have people that don't actually take onions. Onions play
an antibiotic as well.
Yes, it is. It actually has so many health benefits, lower cholesterol, blood sugar, blood pressure, and all of that. But, onions, you don't have people that do not demand onions. Onions are used in so many, variety of foods, even eaten alone as well, complement salads and all that. But, regarding production in Nigeria, we're actually #1 in Sub-Saharan Africa, which is great. Top producers globally, you never have top producers when you don't have China. China, India.
Looks like they're top in
almost everything. Everything, yes. China, India, US, they consume a lot of...
with the exception of jollof rice.
I won't be surprised if they have their own version of it. But
jollof rice.
Yes.
We got to find it.
But yeah, so onions is one of their major consumables, so they produce more of that.
Yes.
Top consumers as well, the same China, India, they have the population for it. Total global production as at 2017 is currently about 122 million tons, which is huge. Nigeria only produces only about 996,000 tons, which is not as significant when you talk about the global atmosphere. But yes, but regarding onion production in Nigeria, we produce in the northern part.
I'm sure we have quite a lot of issues to deal with here, because again, storage is another issue. You see how
storage distribution
gets spoiled sometimes. But we've got to leave it there for today. Thank you, Bolali Agbaje. We appreciate your time. One of the economic think tank at Financial Derivatives Company. Let's take a quick break. We'll be right back in 2. Step one.